Hi, everybody, and welcome to Innovator Café. Today, we are really lucky to have this guest, Rajeev Madhavan, a serial entrepreneur from Silicon Valley. He has a deep background, both as a hardworking, immigrant entrepreneur, and now he's a VC. Started so many companies. He's made an enormous impact on Silicon Valley. And today, we're going to talk about his background and where Rajeev has innovated, both in technology and also in business. Rajeev, welcome to the show.
Hi, Dave. Thanks for having me on the show.
Yeah, it's our pleasure. It really is. It's a real gift to have you here. Yeah. So tell us a little bit about the origins and what brought you to Silicon Valley to start with.
So actually, look, I grew up in India. I was not the greatest student till the third year of my undergraduate degree. I enjoyed life. I think I enjoyed life a lot. In the first few years of my life, got myself into a position where I've earned a lot more hard work after that I could do. And I landed up in Canada in McGill University and then Queen's University in Kingston, Ontario, and then started working in a company called Bell Northern Research, which is a wonderful experience. It was a research facility for Nortel. So you could do in the morning one research, and it really was a open-ended place that you could have in terms of various things that I worked on.
This is a Canadian location, right?
It's a Canadian location in Ottawa. Mm-hmm. And through that work, I was working on something called Verilog, hardware description language. I worked on VHDL before that, and then I worked on this. I came down to Silicon Valley to present a paper in February of, I think it was 91. And the paper, as I came down from the podium, I had a couple of job offers. One was from a company called Synopsys very early on. And so it was very, very new and for me, Silicon Valley in some sense. And this kind of hit me in many ways. Most importantly was the bet. Obviously, in Canada at that time, I was carrying this big fur coat, and I, having grown up in India, in the southern portion of India, didn't like cold weather at all. And here we were in t-shirt weather in that here in February. So I called my wife and I said, "Let's move down here." Right? I mean, I kind of made up my mind right away. And so went back and I told BNR I want to move to Canada, from Canada to Silicon Valley. And they really wanted to keep me. And so they sent me on an assignment here. They had a relationship with a company called Cadence, which I didn't know much about at that time. And then they put me up here for a year and a half. Maybe you'll change your mind and maybe you'll come back to Canada. This place, Silicon Valley, is not what it's made out to be. And within that 1 year, I wrote a new product spec at Cadence for analog hardware description language. Mm-hmm. And was about to leave that and join Synopsys when Cadence made me an offer to run the project that I wrote as a customer as a spec off, right? And so I did that for a year. And, that's sort of my beginnings of my Silicon Valley migration and coming to Silicon Valley.
That is so interesting. I'm originally from Michigan. Yeah. So similar type of weather. I grew up there, so I was kind of used to it. Yeah. And when I moved here, I couldn't even believe where I was, right? I mean, it was actually warm in the wintertime, right? But you coming from India, moving to an extreme weather in Canada, right? You really had to get out, didn't you?
Yeah, Ottawa was just too cold for me. I mean, there's no way I could take it for too long. It just sort of, and for somebody who doesn't do very much winter sport stuff, it was just pretty bad. I mean, I found it very suffocating during the 3-4 months of winter.
Right. So here you are in Silicon Valley, and tell me more about your modern experiences. Before you became a VC, though, you've always been an entrepreneur, even if you were working in big companies. Tell me about the first time you broke out and started your own company.
Yeah, so it was in Cadence. So I joined Cadence to run their analog hardware description language in the analog product side. Worked on that division, and it was run by somebody called Jim Solomon, who was the co-founder of the company.
Yep.
And I had delivered the first version of the product and had to present to a company in Melbourne, Florida called Harris Semiconductor. Right? So I flew up there, presented. On the way back, Jim had one too many wines. He upgraded me to first class because we are the only two passengers sitting next to each other. And I'm sitting next to him, and I asked him a simple question. It was great to sit down with the founder of Cadence. I'm employee number 800. And it's great to get access to him and have 3-4 hours of unfettered access to this guy. It was fantastic.
His direct reports must have been jealous of you. Did they ever get 3 hours?
Yeah. So I basically asked him a question: what would you have done differently if you had the opportunity at Cadence? And he said to me a line which struck me really hard. The project you're working on, the analog division, is going to be bigger than the rest of Cadence. I probably should have done it as a startup.
Wow.
What went through my mind was, wow, Jim is saying that, and why am I doing it?
And he wasn't just flattering you, right?
He just said the thing. And a week later, I decided I have to do a startup, and I quit. So I walked up to his head, and Jim called me up and said, "Why are you leaving?" I said, "You told me that startups are the way," right? Essentially. So I left, in a jiffy. I mean, the whole idea of what is a good startup, etc., hadn't dawned on me, right? I mean, I just had to do a startup. That's all I knew. I mean, this was more about it's better to work in a startup environment than to work in a big company. That was the concept that hit me. So I did a startup called Logic Vision, which was doing an area called built-in self-test. We were funded with a DARPA project, SPIR, and a lot of DARPA projects. It's basically using circuit redundancy and circuit self-test capability to determine when a portion of the circuit is going dead and to swap it to something else, right? And had a bunch of patents and things that we applied for and really did some great work. The fighter F-22 aircraft is one of the things that used our technology. So you could actually pull a board when the plane lands and still the plane will be up and running. So it was a great, cool technology, but we had no idea how to sell this, right? So fundamentally, there were 3 geeks running the company with zero experience in sales, marketing, etc. I mean, that's the reality of where the company was. I was there for about a year and a half. The first commercial customer we had, besides the Uncle Sam and various projects of Uncle Sam, was Apple, and that was an experience. We visited and tried to sell to Apple, and that whole sales process was my first ever sales with a customer, right? Because I've been secluded and been in the R&D bowels at everywhere. I've never sat down and seen negotiations or negotiate and be part of the deal.
Right.
So quickly realized that it's not about writing code; it's about selling that and making some revenue that matters, right?
Right.
and so it dawned on me that this is a company which is going to have certain limitations as a result of that. And I went and I did a second startup about a year and a half later called Ambit Design Systems. So that was, again, a very, very interesting experience. We were 8 people in a room competing against Synopsys, which had just gone public.
Right.
And it was just amazing experience to take them on, because most Silicon Valley VCs, I myself now as a VC would probably have turned me down at that time.
Wow.
Because the 8 kids are claiming they're going to be 50 to 100 times faster than Synopsys, and it's making all these claims, but it's very, very difficult to kind of believe. And even if you believe, how do you take it to a revenue and the experience that you have in terms of sales, marketing, or the lack thereof of the startup would have been a concern for anybody.
And that kind of competition is like war. I mean,
it is war.
They're not going to let you compete.
Right? Yeah, so it's very interesting, right? We had in a year and a half, 2 years, we created the product. The company was sold in 3 years, bought by Cadence for $280 million. It was a great exit for everybody. There were only 40 employees. Everybody literally made $1 million. It was great for everyone. But it was a fundamentally very tough story for selling to investors. We had 60, 70 private investors who gave me small amounts of money early days to just keep it going before VC would put in some money. And obviously the game changed after you won your first 1 or 2 POCs, and we were indeed that kind of speed improvement. Suddenly, mass exodus of VCs wanting to put in money becomes an interesting experience that I went through in that company, right? And luckily, we didn't take too much. We took money from some of our customers, strategy customers like LSI Logic, and we sold it to Cadence. And it's today the synthesis tool of Cadence that they sell.
That's a great strategic angle, and I'd like our listeners to hear about getting your customers to invest in you.
Yeah, so
I mean, you see it as a normal space, but it's not something that entrepreneurs think of first.
So there are good and bad things about doing that, right? The first thing is, the bad is if you don't execute, they get to know about if you miss your numbers, etc. Right? So if somebody wants to acquire you as an investor, they know the what's you have.
More than their vendors, right?
You're not more just a vendor them anymore. As a separate partner sitting there. Having said that, when we were on the trajectory, we went from 0 to 30 million like a ramp. It actually scares the limelight out of them not to move, right? I mean, so it actually helps you in doing that. So you really have to know, are you in the right execution mode where what you're delivering is such that it's got immediate recognition from the partner / potential customer becoming an investor. So Cadence was a channel for us to sell our products more than a customer. They had a synthesis tool, but it was pretty much a dog of a synthesis tool. We could beat the Synopsys means we could beat Cadence by a 10x improvement in performance. So it was, by nature of what it was a much better, superior tool than what Cadence had in its arsenal. So we clearly got that acknowledgement, got that relationship, and got acquired by Cadence in a very short order through that relationship that ended up, right? I mean, so when you do this strategy deal, even on the other side, it's a question of, if it is your partner / customer, the question is, remember, they know your what's as a result of being an investor because they get previewed to certain data that they would otherwise not be able to. That's the handicap. The positive is the pluses are well understood, your successes are well understood, and if you're on a ramp, you actually get somebody who's more excited than anybody else can ever be.
Right. Yeah. Well, they're doubly invested, literally invested.
Yeah. And they look at it and say, hey, there's at least somebody in the group who invested in it from there, who says, hey, my points look good here. So that helps also, but that doesn't help much. At the end of the game, you have to deliver the business yourself.
Yeah, wow, that's really great advice and really an excellent experience. Yeah. So we like to talk about innovation, and you've obviously technologically you've innovated, you've done great things, and the customers, the products speak for themselves. But business innovation is something different. And you're talking about moving through. I'll bet back at Cadence, Jim probably didn't remember what he said to you that inspired you to leave, right?
Yeah, I had reminded him
these little bits.
I reminded him once that, and he said, "Oh my God, I told you that." And I said, yes, Jim, you did. Thank you for that. Right?
Isn't that something? And where else would you learn that? You wouldn't.
Yeah, no, that's the the speciality of Kool-Aid of Silicon Valley, right? I mean, you sit there and you listen to. I mean, my next company, Magma, I have another one of those stories where, so Magma was formed to solve the problem of, it used to be front end or logic synthesis customers in chip design and physical designers in the back end.
Right.
And they throw the things over the wall saying, this is the performance that I think you can get, and the other guy will come back and say, no way in hell can I meet it. right? So we kind of built together the first platform which combined all of these things into a single flow. That was our difference. But it was a big project. It's not a small project. We had close to 60, 70 people in the first 3 quarters, reach 100 people in a year and a half, and really ran the company very fast. Created a bunch of early trials. But I'll always remember my first customer, which is a company called 3D Labs. I was sitting in an Indian restaurant on Lawrence Expressway called Sarovar. It was on Lawrence.
I've been there. Yep.
And in the next table was a bunch of guys from UK talking about this problem of logic and physical synthesis, and they were talking about it. Obviously, my mind is now there, not here.
Right.
Right. And they had just finished a visit with one of my competition called Monterey Design. They had come back from a meeting with them, and they were saying about the comments about that. So I walked up to the CEO who was there at that table, Osman Kent, and I said, "My name is Rajeev Madhavan. I'm sorry I overheard your conversation. I provide a physical synthesis tool here. You should come and visit us." So next morning he came and visited us, and they became my first customer.
The next morning,
right? I mean, they literally, they ran the tests after that. Obviously, it took them. They ran it on both flows. We were significantly better, and they became our first customer. All right, and that also can only happen in Silicon Valley, where you can have these discussions even in a lunch facility, and you can hear about what you need to do at the next table, and go walk up and talk to the customer straight up. So that was absolutely the impact of Silicon Valley, because in every other place you go in, you won't have that kind of quality of people and that kind of quality of customers sitting in the same place you are having lunch at. So it's a beautiful environment to be able to create something new here.
Maybe you need to open a lunch place with a lot of microphones, right?
Yeah.
I don't mean to snoop. I mean to communicate. Wow, that sounded really bad. But yeah, I mean, that's where things happen. That's where things really happen. That's amazing. That's really amazing. Tell me more about your experience with Magma and Synopsys.
So Magma.
How did that follow through?
So Magma was even at Ambit, our marketing style was, and this was a lot of it was dictated by one of my board member, who actually I learned a lot about marketing from. His name was Steve Blank. You can look him up on Stanford's websites and different things. He's got a lot of classes. It's what I call in the face marketing mentality, and we did that at Ambit, right? At Ambit, our launch was on Synopsys' Users Group Day, outside their Synopsys User Group event happening in Santa Clara Convention Center. We had a rig, and we basically launched our company there. Right? And we bought ads on 237. If you're driving by and you have to go to Synopsys, you will see our sign which said, "If you had bought Ambit, you would have been home by now," because we were trying to understand faster than that. Just in-your-face marketing is what Ambit had cultivated and done. In Magma, in the early days, I didn't have to compete against Synopsys because they were not in physical design at all. Right. But they ended up buying Avanti at the end. They actually tried to buy us after our Series A in the Series B stage. That's another story in some sense, but they came to buy us, and we were not ready to be sold at that price. Essentially, that made us continue. But we had initially a reasonably good working relationships with them. Which when they went and bought Avanti, kind of became, okay, we now need to begin competing against them also, right? It wasn't that they were competing with us. So we created a place and route and synthesis tool which combines the two, and essentially did an optimization solution which brought all of the flow together in some sense and had better convergence of designs. Created the technology. One of our co-founders, who stayed there only for 2 years, literally 2.5 years, came from Synopsys. And we didn't know this at the time we had formed the company, but he had worked on a similar project at Synopsys, and his idea of doing what is known as constants delay. Basically, you're sizing a particular design component called cells based on what drive it has to drive. So that whole constant delay algorithm that he had worked on it for his PhD at IBM and at Synopsys, which is what his experience was.
Right.
So he had continued that here, and unknown to us, we filed on a patent on that basis early on, but to be very blunt, it never worked. So we had to scrap it and throw it all out after 6 months to a year.
Wow.
But nonetheless, we had applied for a patent in that space, which did get granted. As you know, Dave, as a patent attorney, patent doesn't mean that you're using that, right?
Not at all.
We ended up throwing that thing out the water. And in fact, one of the youngest kids in the team was a Berkeley PhD. I sent him off 2 months to work from home to redo it all with a different method of doing it. So
the big reset.
It was a big reset for us to have actually done this. And it actually made this particular employee very psychologically down, etc. He had a lot of issues that comes about when a technology that you have spent all your life is not being adopted in a company that you're also co-founder. So he went into a reclusion stage as well, eventually leaving the company. So we launched the product. It was a great marketing to use the word constant delay. So we used the marketing on constant delay. We never really ended up doing any of that, right? I mean, because it doesn't work. Fundamentally, there were various limitations that prevent it from getting used.
Right.
So we ended up implementing it, and because of that integration, we had and a number of other things. We had a substantial advantage. Started taking market share from Synopsys. We were growing, year over year, 30-40%. Reached, $200 million of bookings by 2005, and in 2001 went an IPO. It's a very successful IPO. And, obviously the plan was, if we get into an IPO, we are going to try to build an entire EDA franchise using that. We started acquiring companies. We did about 10 to 13 companies. And we were on the gist of trying to acquire Mentor Graphics.
Mentor Graphics.
Number 3.
In Oregon, right?
Yeah. And we actually had, one of the VC funds, which was ready to give us money. TPG and a partner at TPG was ready to give us the money to buy them. We were beginning on the process. Synopsys heard about it, and that would have put them into a really big trouble, because between the two of us, we actually would have been the dominant IC provider of integrated circuit EDA software. So they were aware of this patent having some issues. They decided to file it as you're using our patent. That would have been our patent, not your patent. And they filed a lawsuit on that, right?
And that's not just trade. That's not just a patent infringement.
It's not a patent infringement. It's basically saying your patent is mine.
Yes.
And you're using it by nature of you declaring that your founder claiming that this is a patent. You must be using it. There is a case in U.S. Supreme Court, which, by the way, I'm quoting now legal stuff. I'm sorry. Things.
Probably better than most patent attorneys.
A signer estoppel, which means a signer, if he's a founder, we are estoppel from challenging the validity of the patent.
Yes. So there's two things you do when somebody sues you for patent infringement. One, we don't infringe. Two, it's not valid.
Yeah.
But when you're the author, right? So you cannot claim, go against the validity, because many patents die when they challenge them. So you're left with one thing. Right?
Yeah, we're left with one thing, which is very, very difficult to win in a court of law, which is, this sounds like buffering. This sounds like buffering. You're telling me this is different than that. And, a judge has to determine this, or not even a judge, a peer group of jury has to determine that this algorithm is different than this algorithm. it was really a big shock for us, right? That we would be put into such a position. Luckily, through the first 3-4 months of doing that diligence, actually probably was in the 6th or 7th month that the lawyers came to me and said, Rajeev, this was a patent that Lucas had worked on while he was at IBM first, and then at Synopsys. And then I said, so why wouldn't IBM have rights?
Yeah, who stole what here?
Yeah. So
right.
why wouldn't IBM have rights? And they have a joint partnership also, it turns out later. The joint partnership said all patents are owned mutually by both. Yes, the lawyers told me, yes, that's all true, but we have to get IBM to support you to do that. And so the lawyers called IBM lawyers, they had contacts with IBM lawyers. And IBM lawyers said, you're in a nuclear holocaust fight between the two of you. Why should we step in? We're not going to step in at all. Hello. They had no interest. So a couple of months before that, IBM wanted me to buy some tools from them because they were trying to sell off some of their tools and
their software tools.
Some of the software they had done, right? Yeah. So we had decided not to, but I decided to try to go buy it again. And so we had bought some of the tools. We were going to buy some more stuff. And essentially, I went up to IBM and I negotiated a deal where we also did a cross license of all the patents. All their patents we had rights to, and our patents we had rights to as well. That was something they had asked for very early on. In the first round of licensing we had done of some small tools we had bought, we thought it was not worth it. But in the second time, obviously, that was very, very useful for us.
Yeah.
So we went and changed after 1.5 to 2 years of the lawsuit. We went to the legal system and said, by the way, if we steal this, then we are licensed to use it because we are licensed to all patents of IBM.
Yes.
Right? It's like a monopoly. You get a $50 get out of jail card that you can get.
Yes.
It just happened to be $8 million for me. That's all.
So you bought this software. You said, by the way, I want this license. I'm like, what do we care? We want this $8 million, right?
Yeah. Well, more than that. Actually, it was more than that. IBM also wanted us to succeed because they had their customers that were. The whole industry, the customers really wanted Magma to succeed. Through this space, even though there were customers who had to buy other software and our revenue went down as a result of sharing, I have to give kudos to the semiconductor customer space. They really rooted for us, fought for us, and helped us. And some of them would call IBM, who was their foundry at that point, to say, "Look, you guys got to help these guys if you can."
Incredible.
It's very, very interesting. We had Cisco do that. We had Qualcomm do that. A lot of companies which helped us get that license and get all of the things needed to make it a much more shorter lawsuit, right? So we went to the court and the judge, that's a decision the judge has to move because it's a contractual decision. Are you licensed or not? So judge declared that yes, if these guys violated it, then they are already licensed by the fact that they have a cross with IBM. So that was one huge monkey off my back, right?
Wow.
I still remember where I was when that decision was conveyed to me. I was in a hotel room checking in Mumbai, and this person from the lounge downstairs is running to me and saying, there have been so many messages. They're trying to reach you left and right. And I'm like, what the hell?
Oh. You're oblivious.
I'm oblivious. So I, come down and take the call from this guy, and he says, "We got this verdict," and it was such a relief and such a thing. That was the, sort of what I call, we had about 50 lawyers working for us during the peak. We spent $78 million in litigation fees for 3 years. $128 million was spent by them. And so around, $200 million of legal fees, and it all came to nothing in some sense. Right? But
incredible.
But the company did lose its momentum. It actually hurt us a lot. We couldn't do the Mentor transaction. It did a lot of different things to us. We had to go create some other products when this went down. the stock went down very rapidly, and I
Yeah.
reached a point where I was sure that if I'm going to Wall Street to explain my stock, the only question I get is what's happening to your lawsuit. Nobody
Sure.
cared about anything I do in the product, so I sort of decided, hey, I'll go invest the money because we were generating cash.
Yeah.
So we went and did new products in analog and different things. It was almost like no risk. I invest in anything. Nobody cares about my investments. Everybody cares only about this lawsuit. And when the lawsuit went up, the stock market started rewarding us back again. Right? It was pretty interesting experience.
Incredible.
And it was one of the toughest things when the lawsuit hit. I mean, I had told my board, if we don't get this mentor graphics, I want to leave and do something else because I really have to be in a place where it continues to grow. I'm not the right person where it's doing something new. And so I had said this to the board, and almost tendered my resignation into the board. And then the lawsuit hit, and the next week I walk in and said, now I can't leave because founder, CEO leaving at a time of a litigation is impossible. And it's also bad to all your employees and shareholders. So I decided to shelve that. And for 3 years, I put up with 55 lawyers,
Sorry to hear that.
lawyers, patent litigators, it was the worst of time that was I'm concerned, right? Because all they can tell me is how things will end in a disaster and what all things can go wrong, right? I mean, they're not what I call half full; they are half empty people. The litigators, especially, right?
They're all trying to balance their expectations, right?
Yes, that's right. And so went through that experience, but that's the time that I actually changed my management style. Because Synopsys was doing this and trying to hire my people, I had to make sure that my top 10% does not move. I had to bring in new employee retentions mechanisms, things that probably were very unique, were attempted in the Valley by us. And we didn't lose any of the key people. And we kind of had this, culture of innovation and things that we kept through that 3 years. Great experience for an operator to have gone through, and matured me in many ways. Some ways I didn't want to, but nonetheless, it gives you a lot of experience that was successful. So 2008, won the lawsuit, got it all settled down, and I walk up back to the board and say, I'm thinking about leaving, and guess what? The economy tanked. Right? The 2008 fiasco. So, okay, I'll give you 1 or 2 more years. I did that. Then we started an M&A process in 2011, 12. Actually, I didn't want to sell. I wanted to hire somebody to take my position. But at the same time, Synopsys put in an offer, and that's what ended up for the board to make a decision towards Synopsys.
Synopsys ended up buying you out in the end.
Yeah, and to their credit, I had built a good relationship through that experience with the CEO. We were on opposite ends of that litigation, and I had to do the attack that I had to do against them during that litigation. Right. I mean, I didn't. I mean, my lawyers would rather I keep quiet, but I never kept quiet through that. I basically informed the world that they're litigating because they don't have a choice on the product side but to litigate. Right? I had to bring that out again and again and make it very clear for the message.
Sure. Wow, it's a testament to leadership. I mean, for you to carry that company for all those years when you had every reason to leave at all those different stages.
Yeah, well, the leave portion was like, look, at the end of it, it was a great experience, and I think the shocks and tribulations that we went through clearly grew me up a lot better than had I not gone through that. Right? I mean, it certainly taught me a number of things that otherwise would not have been spelt on me.
No doubt, and it seems to me you're in the perfect position now. I mean, you could go and start your own company and do an amazing thing, I'm sure. But now you're helping other young folks. Just like you were building companies. Right?
So, Dave, I think, in 2012, as I got out, I wasn't sure what I'm going to do. Right?
Right.
Am I going to run a company? Am I going? I had a great venture capitalist at Magma called Mark Perry from NEA, New Enterprise Policies. Mark is what I call the gentleman VC. Okay, I mean, he came into the company as a venture capitalist from NEA. I was very tough because I had a bad experience with at Ambit with my VCs, etc. They wanted to kind of get more percentage ownership than they had by doing valuations lower, etc. Whereas Mark and Dick Kramlich, two gentlemen VCs that exist in Silicon Valley's history.
Right.
They convinced me to take some money from them, and I ended up, really being enamored by how Mark was essentially. He came to me about a year later after he came on board and said, "Rajeev, I think you have a company which you can take IPO next year. But let me tell you, your finance team sucks. Everybody is bad. You need to rebuild it." And he was not on the board. And I immediately turned to him and said, "Can you join my board and help me build that?" And he came on board, and he was a Silicon Graphics CFO before that. So this is in his DNA. And he kept me out of all trouble, including the backdating things, etc. None of that Magma or I had any issues, thanks to Mark Perry.
Sure.
So he gave me a feeling I should be a VC. And I've done in the last 10 years, since 2015 when I formed a venture fund. Before that, and from 98 when I got my first exit, I've been doing a lot of angel investments. I've done like 28 investments prior to Magma exit. And after that, I've probably done quite a bit of investments. So somewhere around 60, 70 investments in different companies I've been involved with, Dave. So wanted to become a VC, but 8 years into that VC life, I quickly realized I'm a better operator than I am in a VC, because
you can't help yourself.
Pardon?
You can't help yourself. Right?
That is correct. And the second thing is when you are an entrepreneur, I'll give you an example, right? I mean, I had one of my companies which was sold for $325 million. We made decent money. Entrepreneur made 30 million. I was requesting the entrepreneur not to sell because I had actually helped them work very hard in that company. And 6 months later, the company booked 100 million. It was going from 6 to 20 when it was bought. And within 6 months, they had 100 million deal with Google.
That's growth.
And that's growth that would have given us one more zero at the end of the process.
Oh boy.
So, but when you are a VC, you can only guide an entrepreneur. You cannot do anything more than that. It's like teaching
running
your daughter,
the company.
It's like teaching your daughter how to drive. On the first day, I realized I'm very bad at this because I can't.
You can't grab the wheel. That's right.
All right?
I have a 15-year-old who's driving now. I know exactly what you're talking. I wish I had a brake on my side, right?
Yeah. So looking at it, and you're going, I don't have a brake. I don't have a steering wheel. This is a very tough thing, right? So that's why I did fund 1, fund 2, and so 330 to 350 million in both private investments and venture investments. I decided after Clear 2 that I would go back and run back into operations. So my plan is to go back into operation. I'm just finishing up all the paperwork necessary to allow me to begin that process. But certainly I want to go about doing that. And that's that. And there could be no better time than now, because everything we see in AI is going to redo everything that existed in the past. And there'll be many companies who have missed the boat entirely, or many who have adopted the boat thinking this is good enough when you could have done it completely different. So I believe the opportunity will be there for many, relatively medium-sized to large-sized companies to change their modus operandi and build something bigger, as well as a lot of early stage companies have raised tons of money in the last few years, but is going to understand that selling something like this is not a piece of cake. You just will have a lot of work that needs to be done to make that transition happen. So I think the timing is right, and I'm ready to go back to doing something, right? And I'm here on a public thing telling you that. So this is just about the time. Having said that, I'll always do private investments because it's always great to work with entrepreneurs and help them. And my private checks are relatively big. I'm not just doing very small angels. If I like a particular project, I would certainly do the investments. But the reality is I've concluded that it's better to be on the other side for me. And it all very much depends on people to people. Some people love the fact that I'm just doing a statistical arbitrage and 10 companies average, I'm okay. Right? For me, life doesn't go that way. Every company I invest, and knock on wood, I mean, I'm pretty much out of the 15, 16 that I've invested through, one is the only one that hasn't made it. Everything else has made it. So to me, I work very hard to make that happen. And if you look at the ratio of successes, it's very high among my investments because I try to make them successful over and beyond the call of duty. It's almost like a first-time professor who takes his PhD students. Literally, all the papers are the top quality. It's the same for me. It was, and I did that. But having said that, I clearly believe that it's time to go and build a good entrepreneurial experience again.
Well, welcome back to the machine.
Yeah,
I mean this is quite an announcement. I'm thrilled to hear this. It's the sensei is returning back to battle. It's amazing, right? And I to the listeners, I write a lot of patents for many of your companies, and I've invested in these companies in their own way, and I've actually gotten the inside scoop where I look and I see the technology and the breakthroughs, and the genius. I'm able to see when the sausage is being made, right?
Yeah.
And these breakthroughs, because when engineers, innovators come up with these ideas, it's not always clear what the breakthrough is unless you're on the inside, right? And that was always been you. You've always been the inside guide, never interfering, always guiding, but always, understanding you're the general in the trenches. Right?
Yeah. So when in the patents that I've sent you over the last 5-10 years, I mean, it's basically and unfortunately, I have a lot of experience in patent litigation, which I didn't want to, but I have. So you have to pick what is the patent, what's the copyright, and what is the trade secret that you want to keep in your company, and what is it that once you find it, can you get an entrepreneur to just focus on that if they file a patent or if they file a product, even for that matter, right? I mean, and you don't necessarily, when you launch your product, market what the differentiation is so that somebody else can copy you either, right? I mean, that's you really need to make the customer understand what it is without necessarily having to explain every secret sauce that you have.
Sure.
In your arsenal, right? I mean, that is the talent that a lot of people have to gain and learn and do as well in the early stages of the company building, right?
Right. Yeah, I've been in many situations where the overzealous and anxious salesperson, spills the secrets.
Yeah.
Right.
And the fundamental is the customer doesn't really care, or the ones who care are the ones who are actually just feeding it straight to somebody else, right? So you really have to focus your energy to get things done.
Right. Right. Rajeev, this has been great. Really great stories. Any final thoughts on entrepreneurs, especially the ones who are not just graduating, but the ones who are about to leave their job and make that step and start their own startup company? What's your best advice right now?
I think there couldn't be a better time than now. The reality is Silicon Valley is flush with cash. Okay, I mean, unfortunately, the cash goes in herds. Herds of AI is what it is right now. So if you're an AI, you're going to get funded. Unfortunately, that's the way it works. You use the word AI, you throw it 10 different ways, you seem to get funded faster than anything else, right? That unfortunately is true of the market we are in.
The new careless money.
But there's a lot of money that exists in Silicon Valley. And we have a lot of people coming in from outside who are investing, whether it's Middle Eastern money right now, whether it is it's all good if you're an entrepreneur because you're getting in access to one of the main things that you need, which is capital, right?
Sure.
In terms of ideas, this is the best opportunity. Even if you're a mid-sized to large-sized company, you have to look at the changing dynamics of the market. And the market is about to change. Data centers, for example, wasn't as big as it is now, and it looks like it's going to be huge. But each one of us, there will be like 10 times the computing power we had on us. Each person's equivalent of tools that are running on the cloud, right? That's the way to look at it, the data center, right? So if you have 9 billion people in the world, and the world is increasing, and the applications each consume more and more per human being, we are going to have a growth in data center, and that means across the board changes in things that can be done on the edge of applications, right? Whether intelligence on the edge, that's also going to change. All that means the infrastructure fabric is going to be there to make the changes in the next 2 to 3 years a lot. It'll still continue to grow, but the basic capability there, which essentially means that the software, and every time you increase the infrastructure capability, software comes and eats more and more of that. And now you can put 10 times the software with AI, because AI tools will help you code 10 times more efficiently. So essentially, we are in a world where I don't think I can be as excited as I can be right now in terms of the productivity. Everything I've learned in my school days and university days, etc., are almost like useless now, because you don't need to learn that, right? You can come off, and this changes the way in which we have programmed, way we have thought about different things, way we can model things. So essentially, it's a beautiful opportunity if you can go in, understand the segments you are in, and address the customers from that segment. The opportunity is very large and untapped as we speak today. So this is the best time for an entrepreneur to leave the jobs, go and do stuff.
Yeah. And 10 or 15 years ago, everybody was talking about digital transformation. They're taking these old crusty companies and just basic automation, right? This is the exponential version of that.
This is an exponential version of that, and this is, people think of it as AI transformation of your business, right? And that means if you are an entrepreneur leaving in with 2 to 10 people, you can create what was created by 100 to 200 people. Okay, and if you're a large company, if you have thousands, 20,000, 30,000 people, you could be reducing by a factor or increasing your productivity by a factor, such that the products you offer are much larger. The potential is huge.
Right.
Either you're tapping the efficiency as a large company, or you're using the efficiency as a startup to compete against multiple SaaS products with an AI system that builds it all together. So the opportunity is really there today to do something new. So I would say, in software development, and I'm using the software in a kind of nebulous fashion, because a lot of people will say generated by AI. It doesn't matter. It's basically he who understands what the application is will get to that application very quickly today, versus what would have taken a much longer process in the past.
With many more people.
Many more people.
Great advice. Rajeev, thank you so much for joining us. Thanks for joining Innovator Café, and I hope to have you again on here soon.
Thank you.
Take care.
Thanks.
You've been tuning into Innovator Café, the entrepreneur go-to, with your host, attorney Dave Stevens. You can find more episodes on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and the website StevensLawGroup.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.